Welcome back, champions. Another mind-boggling stock news. Increased exposure, higher retention, streamlined operations, global presence, better pricing, solid underwriting, and a strong capital position have helped the property and casualty insurance industry perform well. The industry has risen 13% year-to-date, outperforming the S&P 500 Composite's rise of 10.8% and the finance sector's increase of 3.7%. Here, we focus on two property and casualty insurers, namely the Allstate Corporation, A.L.L., and Arch Capital Group Ltd., A.C.G.L. Allstate, with a market capitalization of $43.3 billion, is the third largest property casualty, P&C, insurer and the largest publicly held personal lines carrier in the United States. Arch Capital, with a market capitalization of $38.3 billion, offers insurance, reinsurance, and mortgage insurance across the world. Let's now see how these P&C insurers fare in terms of some of the key metrics. Number 1. Price performance. ACGL has gained 37.2% year-to-date versus All's rise of 17.2%. The industry has risen 14.2% in the said time frame. Number 2. Return on equity. ACGL has a return on equity, ROE, of 21.8%, which is higher than All's ROE of 14.4% and the industry average of 7.8%. Number 3. Return on invested capital. ACGL's return on invested capital, ROIC, of 16.6% betters the industry average of 5.9% and All's ROIC of 4.5%. Number 4. Dividend yield. Allstate's dividend yield of 2.5% exceeds the industry average of 0.3%. Arch Capital does not pay dividends. Number 5. Debt-to-equity ratio. All's debt-to-equity ratio of 43 is higher than the industry average of 21.7, as well as ACGL's reading of 16.3. Number 6. Growth projection. The consensus estimate for ACGL's 2024 earnings indicates a 1.2% increase from the year-ago reported figure, while that for All implies a year-over-year increase of 1,494.7%. The consensus estimate for ACGL's 2025 earnings indicates a 5.2% increase from the year-ago reported figure, while that for All implies a year-over-year increase of 14.4%. The expected long-term earnings growth rate for ACGL is 5.1%, while that for All is 7%. Number 7. Net margin. ACGL's pro forma net margin for the trailing 12 months was 33.7%. Higher than All's reading of 2.3%. To conclude, this comparative analysis shows that ACGL has the edge over All with respect to price performance, return on capital, leverage, and net margin. All outpaces ACGL in terms of dividend and growth projection. Did you find the information helpful? Let us know in the comments.